Okay, recording this video on Sunday, the 10th of November, 2024. Just gone 3:29 a.m. Chicago time. Do hope you are doing well. So it's the weekend. Time for another weekend futures market recap. I'll go through 15 of the largest futures markets and I'll show you what I'm seeing on my charts. Do hope you're having a good weekend. Crikey, what a week that was with the results of the US election. Going to spend just a couple of minutes just talking about directionally market-wise what that means going forward, but I do need to tread lightly because last weekend I got quite a large number of unsubscribes from the email list, and that's maybe because some of my comments were a little bit too partisan and I showed my colors a little bit. And at the end of the day, yes, it was a decisive election in terms of winning the popular vote, House, Senate, presidency and so on, but it's still 52-48, and the 48% of the population is obviously going through a process right now to try and figure out what it means for them going forward. So I want to be a little bit respectful and just tread lightly. For me, this was an unexpected result. My base case is that we'd end up in front of the Supreme Court until the day before inauguration. So I'm a little bit surprised from that perspective. But there is a silver lining to that in a way. With the first Trump presidency, he was not prepared, and so making appointments was a mess. He relied too heavily on the Rhino Republicans. The Senate confirmation process was slow. The establishment and the Democrats did everything in their power to derail his presidency with the Russia business and so on. This time around, I think all of that is cleared up. It's almost like we needed the last 4 years of the attacks on Trump for him to be in this strong of a position, and it's unusual that he's had a clean sweep. Plus, we now see all the dirty tricks that the establishment can play against the presidency, and eyes have been opened to that. I think the rate of change and the magnitude of change might surprise some people, and I think that might be a good thing. The market wants clarity in terms of the direction of the country, not only legally and regulatory wise, but also the mood of the country. And so I think people will quickly catch on as to what that is. The pendulum has definitely swung. The pendulum started swinging after COVID. My initial view on what that pendulum swing meant was a movement back towards Labour. We always have this dynamic in the economy between the power of capital versus the power of Labour, and we've had 30-40 years of capital being dominant above Labour because the cost of capital has been coming down, and people with assets and the ability to borrow have done the best in the economy over the last 40 years. That stopped when interest rates hit virtually zero. Everything shifted the other way. All of a sudden we had inflation, interest rates moving up. We had Labour saying cost of living is out of control. We need to redress the balance, and so minimum wage rates going up, rent controls starting to come in and so on. So that pendulum has swung towards Labour versus capital. My thinking is that the next 20-30 years that is going to be the general thrust, and so that means there are going to be different winners over the next 30 years, and what does that look like in terms of where you put your energies and where you invest your dollars. But now looking at some of the Trump ideas and policies, I think there's another pendulum that's also swinging, and that's the size of government. We've been going again through a 30-40 year cycle where the size of government has gotten bigger and bigger and bigger across the world, and this could be the end of that, and we start reversing and going the other way. Not been seen yet globally. The only other clear example is Javier Milei in Argentina, who's slashing the size of government there. But Trump could start a movement in the developed economies where government is seen as, you know, too large and the problem, and that starts to being reversed, which I think is a good thing. I'm a laissez-faire economics proponent, and government encroached everywhere in our lives, and it's time to take that down a peg. But so far, that would be just Argentina and the US moving in that direction. Certainly the other developed economies, Japan, the UK, France, Germany, and so on, have not woken up to that. And you can't just slash government spending. It has to be replaced by private sector investment and spending. So it'll be interesting to see how that plays out. I tweeted a link to this page on Wikipedia this week, which I think is one of the most important pages in Wikipedia. It's a list of countries by government spending as a percentage of GDP. This isn't just the tax take, this is the tax take plus the deficit spending. You can list the countries. 2022 is the data, which is fairly recent, but then you can organize the data by declining government expenditure. And yet you've got some small countries up here at the top. But here's France. This is where I am at the moment. And they're sitting at 58.5% of GDP. Government represents 58.5% of GDP, made up of taxes, 53%, and then deficit spending, almost 5%. That's an incredible number. The government is the economy at that stage. It's like you have become a near-communist country if you define communism as the ownership of the factors of production. It's like you are the factors of production there. Here's Italy, same thing, 57%. The US is down at 38 down here, which is a better number, but historically it's still huge in terms of where the US has been. And there's Australia, 38% as well. Deficit spending, 5.5%, 32% in terms of taxes. That's just out of control. So this, I'm wondering if this is the pendulum that is going to swing, that this number is going to get down to 28%. Bottom of the list down here, I always love this, is at 15%. Here's the historic numbers, but down here at 15% is Singapore. Singapore at 15%. Yes, it's a small island economy, very little defense spending, but it shows that that's just a toll on the economy that the government is being paid in order to make the basics in the economy work. So if that's the target, we're sitting up here at 38%. I wonder over the next 4 years, potentially 8 and 12 years, what is possible in terms of that number. And so the government getting out of the way of the economy in terms of regulation and taxes, government overreach, and so on. All of that excess government results in lower economic growth. So if you take that out of the way, what is possible in terms of economic growth going forward? So for me, that's the most interesting thing that I see in the Trump plans going forward. Do we have a total rethink of the size of government and the impact of government on the citizenry, and that starts to catch on worldwide, and that if it works in the US, other developed countries around the world will start looking at their own government and saying, what are you doing for me? Get out of the way. Some random thoughts on the election. Hopefully that was not too partisan, because I think in general the US population is for smaller government. So maybe that's something that the American populace as a whole will agree is a good thing and potentially a result of the Trump presidency. Let's get to the charts. We'll deal with the Emini chart first, because we are up 5% on the lows and we're a continued uptrend. I'm kind of glad I kept into my long equities position, didn't go flat. With the uncertainty in the election, you'd have missed out on that nice little bump that we had. And we're up in the 6,000s on the Emini, which is just extraordinary. Yes, it's rainbow patterns up here, so we could have a little bit of weakness from there, but as we go down the charts, you'll see that we're still breaking above resistances and we're not putting in pullback to end of trends yet. We'll have to wait towards the end of the week before we start seeing those. But there'll be some profit taking at some point, but I don't think it's early in the week. If anything, it'll be delayed, but let's see. So that's the Emini chart. Background's in red, which means we're in an uptrend in terms of price and volume. The bars are red, so in terms of price, we're in an uptrend here, and we're above the trailing stop. Last time we saw blue professional bars was 1,000 points away at 5,200 down here, and we're up at 6,000s. 135-minute chart, next time frame down, exactly 3 135-minute bars in a day session of the E-mini. We had a double there this week. That was support on the low and the intermediate time frame. Came in here. We bounced from there with through resistance on the lowest time frame. We're going up to make resistance on the intermediate time frame. Nothing here to suggest that we've reached a max. Momentum, it's nice MIG read at 31,000. That'll likely keep on going up. We've not got a blowout reading yet. A 45-minute, there we go, that was that low that was made during the week. Blue professional bars step in here at 5,700. A nice triple pattern with supports on all three time frames, and we bounced from there. You can see on the 45-minute chart with through resistance on the intermediate time frame, we've got to go see at least a pullback to end of trend on the lowest time frame. We've broken resistance there. Nothing in terms of amateur bars or professional bars taking profits at these highs, so we'll keep on going there until we put in those pullback to end of trend patterns. And the 15-minute chart. This was the week before. The blue professional bars stepping at the lows. There was a little crack below those lows. That was a clear out trade, and he stopped sitting right underneath there, got cleared out at that point. That was the election results starting to come out, bang, and then we got a gap up on the 15-minute chart because we don't have the overnight activity. You have to look to the tip bar chart for that. But a nice little pattern, sign of strength in terms of price and volume here with the red arrow breaking up. We've got a triple. That's the red line here. Big things happen at triple, bounces or breaks, and we had a bounce, pullback to end of trend on the lowest time frame, syncing up with all of those supports coming in on the highest and the intermediate time frame. Started to break into an uptrend there before the election results, and then bang, we break. Got some Rambo patterns at the highs, but you can see we're above resistance on all these time frames, the intermediate and the low. So we got to go see pullback to end of trend on those time frames. So that's going to push us above probably the 60-50 type level before come in. And the 13,500 tip bar chart, here we go. So we can see this is the overnight activity included. That's last week's. This is the beginning and the ends of the week with the solid vertical yellow line. Blue professional bars, exhaustion sell down there, sign of strength. We come back, there's the little crack below that support, clear out trade, sign of strength comes back in, bang, and we race away. This is a gathering pattern here, not a whole bunch of blue professional bars, we've got 4 or 5 going on there, but that's blue professional bars in buying that breakout in anticipation of higher highs. So that's a gathering pattern there. It's a stair-step trade, and we take off to the upside. Background still in red, so we've not had a change in trend here. We're still in and up. And if we go to better sine wave here, you can see down here at the lows, those sign of strength coming in there at those lows, bang, breaking into an uptrend. We got some pullback to end of trends on these time frames, but we're above resistance on the highest time frames, so we've got to go get rid of that trending energy with some pullback to end of trends, or at least a support to resistance bounce on the highest time frame there. So there we go, the equities markets up almost 5% on those lows, and that was a vote in confidence in the decisive win by Trump. And we've also had the US dollar move up. We'll see those in the forex charts. So euro chart first. This is the most important chart, where we look at the 1500 tip bar chart. There we go, leading into the election, blue professional bars, super high average trade size, big pro bars there into those highs, and then sold off during the election news because the capital is flowing into the US and being deployed in the US stock market, and so it's moving out of these other currencies. We didn't have blue professional bars at the lows. We had an exhaustion sell pattern down here, but no blue professional bars taking profits. We ratcheted back up to 108. Blue professional bars come in, and we're below the lows of those blue professional bars. They were just using that activity there to get out, get short, and we continued down. And we're one at 107, and no blue professional bars yet at those lows. Have we got one at the end of the week? No, not one there. So downtrend in terms of the euro. British pound. Same thing, ratcheted up and then sold off. Here we've got one blue professional bar coming at the lows. We've come back up and it's fairly weak. No exhaustion sell down here, so I think that's going to continue to weaken as well. And the Aussie dollar, same thing. That was the trade over the election. Blue professional bars then sold off down here, but then it had a pretty strong bounce into a bit of a U-turn here. Blue professional bars into those highs, selling it down. Big pro bars come in here, super high average trade size on that retrace, stair-step trade down, and we're continuing down. So this is all the way down until we see blue professional bars on these lows coming in. So not good for the Aussie dollar. And the Japanese yen also weakened. There was the trade over the election. Rambo patterns into those highs, sold off, come back down. Again, Rambo patterns down here at the lows. We're bouncing off those. Those are amateurs at those extremes. The blue professional bars have come in on the retrace here, and hasn't weakened below the lows of those blue professional bars yet. But that's what I would have expected to happen, is Japanese yen to fuss around until we break through this 65.5 level here. 10-year notes. 10-year notes have bounced. Who knows what the bond market thinks at the moment, whether rates are going up or down. At the moment, with the strengthening in the bond market, that means rates are potentially coming down. Certainly the Fed announced that, but whether it's going to be conclusive going forward, because Trump is not necessarily a low debt guy, so maybe the rates are going to stay elevated, and that means there might be further weakness in the bond market. We've certainly maxed out for the time being here. Exhaustion buy, blue professional bars coming in with some weakness here, so let's see if that follows through this week, because on these lows it was Rambo patterns into those lows, and the professionals kind of gamed it up at that point, but we didn't have exhaustion sell down here. We didn't have blue professional bars coming in on the lows, and so for me that's still a bit suspect. Now gold's interesting because gold was strengthening up into the 2800 level because of the political uncertainty, not just with Ukraine, Israel, Iran, and the US elections. As soon as that political uncertainty started to come clear, the gold market sold off pretty hard, and that's what was happening during the election there. As a result of their big pro bars come in here, selling it down and down. Yes, temporarily we might have bottomed down here at 2660. We got exhaustion sold, big pro bars coming out the lows. We bounced from there. Potential stair-step trade here, so this will ratchet back up as soon as we see those blue professional bars sequence finish there. So let's see if that weakness in gold that we've seen over the last week and a half stops and we get a continuation of that rally in gold. Silver, similar thing with silver, sold off prior week. Blue professional bars up here, selling it down. No exhaustion buy at that point. I'm not sure if we had it the week prior, but we do have exhaustion sell down here. No blue professional bars necessarily at the lows here, but got the weakness there. Let's see if silver cracks through 32s, follows gold into a little bit of a relief rally on silver. And Bitcoin did very nicely this week. We had some positive discussions about Bitcoin with Trump, and I think he's also come out and said that over his dead body will there be a central bank digital currency. So I think all of that's positive for the crypto markets. So here we have exhaustion buys with blue professional bars for happening here. I'm going to have to pull out another chart on crypto. We're going to look at this one, because that potentially is a gathering pattern that's happening at the moment on Bitcoin, and that we're breaking up to new highs here. So let's look at this chart here. So a gathering pattern is happening at previous highs, buying in anticipation of the market going a lot higher, and you can see that here. Yes, 72 was an important, 72, 73 was an important level, but now they're breaking out again. 4,000 read, be an exhaustion buy pattern at this point. In terms of cyclically, what does that look like? Here we're playing out support to resistance. We're through resistance on the low in the intermediate time frame, no pullback to end of trends yet. So let's see, this could be a big move. That this buying was not topping out and rolling over. This was a gathering pattern on a higher time frame, waiting for higher highs. I mean, we're up at almost 80,000 over the weekend on Bitcoin, which is pretty good. Crude weakening a little bit. So we had an initial weakness after the election here. Big pro bars taking profits, but we bounced from there into these highs. Not a whole bunch of blue professional bars coming again at these highs, and we've weakened from there. Again, I think the war premium is coming off in crude, and so that's why it's weakening at the moment. Probably same thing with natural gas. Some weakness in natural gas on the election news, and we bounced from there, but we're coming back down. Not a whole bunch of blue professional bars at the lows here, and so we're still weak on natural gas. Again, war premium coming off there, and drill baby drill going on in the US will increase supply of natural gas. And copper, some big bounces here. We had big pro bars coming in here, selling it down at just under 450. So we'd had exhaustion buy, bearish divergence flush. Big pro bars come in here. You can see the backgrounds in blue. That's big pro bars selling it down, bang, and then they pick it up at 425. Big pro bars coming in here, rally back up. Big pro bars coming at 450, sell it down again, bang. We're coming off on copper. So some big swings in copper either way. Big pro bar here, getting the move going and then taking profits at these highs, but it hasn't rolled over yet. The background's still in red, so corn has not rolled yet. Soybeans, though, does look like it could roll this week. So big pro bars coming at the lows, exhaustion buy down here, bang, break into an uptrend, have a big rally up to 1044, and then the reverse comes in. Big pro bars come in, exhaustion buy, bearish divergence, we weaken from there. We're under the lip at the moment, so let's see if that breaks that back down through 1024 and so on. Continues to the downside. Got a frog in my throat. And lastly, wheat going nowhere. It's just batting backwards and forwards. We don't have a clear picture from wheat as yet. So there we go. Hope your trading is going well. I think it's going to be fun trading because a lot of things are kind of coming clearer. The background picture, all the uncertainty that we've had to some extent is out of the way, and so we're going to have some nice trending moves, I believe, in some of these macro markets. Let's see how the equities markets ends up this week. I think we're going to ratchet a little bit higher, but at some point there'll be some profit taking and maybe a little bit of a buy the rumor, sell the news type profit taking. But we'll wait and see. Hope your trading is going well.